I'm Monica Meng,
I'm Gideon Cohn.
and we're the co-founders of Good Capital Investment Group. So Good Capital is a wealth management firm that focuses solely on sustainable and socially responsible investing. We're independent, fee-only, fiduciary, all the important things when you're looking for a financial advisor. We believe, here we are. Forgot to share our pictures. We believe that as a community, we wield immense power and that together we can create change. And that's why we're on a mission to help purpose-driven individuals and families like yourselves align your money with your values, all while growing your wealth. We're striving to also close the gender wealth gap by empowering women and other minorities to invest and take control of their finances. We're all about financial well-being and helping you to develop a good and healthy relationship with your money. So today we're going to be talking about sustainable investing and how you as an individual can make a positive impact using your money. We know this is a huge topic and we're going to condense it into 30-ish minutes, leaving a lot of time for Q&A because we know everyone always has a ton of questions. And each topic that we're going to be talking about today could be its own webinar because there's just so much to talk about. But we also, as I mentioned before, want to leave plenty of time for the Q&A. So if there's anything that we don't have a chance to get to, please get in touch with us after. Use us as a resource. We love to share our knowledge and our experience. Definitely hit us up. Let us know. We want this to be as interactive and engaging as possible, so please put your questions in the chat box. Also, just a little compliance thing, what we're talking about today shouldn't be considered tax or legal advice and may not be appropriate for you depending on your particular situation. But if you have any questions, feel free to email or get in touch with us after. All right, we're gonna start with just a background on how we got to where we are today with Good Capital and where our personal journey with sustainability and social responsibility really got started. So Gideon and I are married, which is why we're here together in one video Zoom. But we're gonna back up to, so I got my career started out of college. I worked at Citigroup in an analyst program, and I stayed at Citi for 4 years. I did a little bit of product management, sales, implementations and operations, really saw the gamut when it comes to financial services. But at the end of the day, I was looking for something more meaningful in terms of my everyday work. So I've always loved education, so I jumped into teaching preschool, which was totally different and surprisingly, so much more stressful than working in finance. Teaching 17 3-year-olds every day is just the most exhausting, but also the most rewarding thing. Unfortunately, didn't get paid that much. That's a whole other issue with early childhood education. But then I moved over to ed tech and worked at a few ed tech startups, worked on my own for a little bit, went to grad school and got my master's in education and technology. And then when I was coming out of grad school and thinking more about what I wanted to do long-term is when we started thinking about Good Capital. But we'll shift over to Gideon's story and see how they meld together.
So again, I'm Gideon Cohn. My journey towards sustainable investing started very abruptly junior year of college, where I was hit by a car, which is not really your traditional entry point into a career. No less, the car that hit me was a Prius, which would probably end most people's career in sustainability, actually probably create a vendetta against sustainability. But yeah, I'm thankful as a Prius because I probably wouldn't be here if it was a semi. So as a 21-year-old junior in college, I got a really, crash course, pun intended, in how our healthcare system in America works, our legal system in America works. I was faced with about $65,000 worth of medical bills. So I actually had to file a lawsuit against the person that hit me because it wasn't my fault. So I ended up with a lump sum payment, which is a lump sum of cash. So I started to learn how to invest my own money. Pro tip, if you want to scare the hell out of your parents twice in 1 year, you should probably get hit by a car first and then learn how to fly, which is exactly what I did. So I went down an aviation rabbit hole. I became an airline captain. But during that time, I was very much studying finance. I always had a textbook with me on the flight deck. I actually got to practice doing financial plans with fellow pilots. I became very confident managing my own money and eventually managing the money of pilots. And as I got deeper and deeper into the finance world, I stumbled across sustainable investing. And I really took the opportunity to look at what it is exactly that I was personally investing in And I got pretty disgusted about what companies I was supporting and what companies I was profiting off of.
Yeah, so Gideon and I reconnected after college, and then over the past several years, we've kept coming back to what we personally can change in our lives to be better global citizens, help make the world a better place, as cliche as that sounds. And this mentality and life choice has influenced how we shop, what we buy, where we buy from, what we eat, trying to eat more plant-based, minimizing our carbon footprint, all of these sustainable and socially responsible life choices. And then funnily enough, one of the last things that we did was make our own money more sustainable, which is what Gideon was just mentioning before. So we were actually on a run on the West Side Highway in New York City for all you New Yorkers, help other people do what we were doing for ourselves. So to start our own sustainable wealth management firm so we could help others align their money with their values just like we were doing for ourselves. Often when people think about sustainability, they forget to take into account their own financial sustainability. And that's what we're here to change. So by divesting from harmful industries such as coal, gun manufacturers, tobacco companies, prison companies, and actively making a positive impact on large corporations through shareholder activism, proxy votes, directly engaging with the companies themselves, our clients are working to create real and lasting change using their own wealth, all the while feeling more confident about their finances too. So that's why we started Good Capital. We wanted to be more intentional with our careers, our lives, and sustainable investing is somewhere where we felt we could both do that. All about voting with your dollars. And I'm going to say that at least 5 more times today.
Yeah, so that's what this webinar is really about, is how do we as consumers, as investors, vote with our dollars? Because it's extremely important, it's extremely powerful, and it often gets overlooked. So we're going to go through a couple of ways that we all as individuals can really shift the needle and be more socially responsible with our finances. And we're going to go through 3 different steps we can all do, and it's going to go from most simple to more complex. So the low-hanging fruit here is what we buy and where we shop from. As a consumer, we all have an immense power with where we shop. And if we shop at places that align with our values, that's going to be represented in the marketplace. They're going to be more minority-owned businesses. There's going to be more sustainable products. It's really like putting your money where your mouth is and aligning your money with your values. So again, would be supporting BIPOC minority-owned companies, B Corp certified companies. Good Capital is going through the B Corp certification process right now, and let me tell you, it's extremely rigorous, and they really vet their companies. So if you're looking for any goods and services, the B Corp website has a marketplace for a whole slew of different services. So I would recommend to look there if you're looking for goods and services.
Yeah, I think these will change, or at least it used to. It has a marketplace that you can check out too that has sustainable, socially responsible vendors, which is great.
Yeah, so on a personal standpoint, like I'm a sucker for nachos. I love nachos, and I won't buy nachos from Taco Bell because I know that my dollars are not going to support causes that don't align with me. The CEO continuously makes donations to companies and corporations that are disgusting. So while I like their nachos, I won't support Taco Bell.
You're not getting Gideon's money.
No, not getting my money. The next step of what we can all do with our money is where we bank. And a lot of people skip from consumer dollars to investment dollars, but banking dollars are just as important. There are about 5,000 banks in the United States. Yet the biggest 4 banks represent 45% of all deposits. So I'm talking about JP Morgan Chase, Citigroup, Wells Fargo, and Bank of America. They own about 45% of all deposits. Not all banks are created equal. There are good players in the space and there are bad players in the space. So if we're all marching for BLM and being activists, yet and we shop at a BIPOC minority-owned company, and you swipe your Bank of America credit card, well, Bank of America is getting a piece of that profit. Bank of America also invests in privately owned prisons, which profit from racist policies. So while you're supporting one cause, your financial action might be doing the exact opposite. Similarly, if you get disgusted about gun violence every time there's a school shooting, yet you bank with Wells Fargo, well, Wells Fargo actually underwrites the NRA. So what we bank with actually has, it can speak volumes of what the companies they support. So there's two things we can do here to solve for this problem. We can either walk away from the bank that we bank at, which is pretty easy. There's online signups for online banks. There's a whole slew of different options. Or we can push these big banks to be more sustainable. And that's what we've done at Good Capital. Good Capital is partnered with a company called Mattervest based out of Europe. And if you go on their website, which is mymoneymyplanet.com, there's a manifesto to fill out. It's super easy. It took me about 15 seconds to fill out. And what they'll do is they'll email your bank socially responsible or sustainability officer that will push that bank to be more sustainable thinking. So again, it's mymoneymyplanet.com. It's a 15-second manifesto, and it's actually pretty cool. They will BCC you on an email to the sustainability officer telling you that you want more transparency with your bank. So that's two. So what we fund through our bank accounts. And lastly is sustainable investing. And this is our specialty at Good Capital. Like Monica said, we were our own first clients because we were disgusted about what we were funding, about what we were profiting off of. And our money, our invested money is very, very powerful. In fact, changing how our money is invested is 20% more effective at lowering carbon footprint than sustainable consumption. So if you're a vegan for environmental purposes, yet you have an investment account that invests in Tyson, well, you're kind of just, you're not doing anyone any good because that investment is acting counter to your actions as a consumer. So again, changing how your money is invested is up to 27 times more effective at lowering carbon footprint than your sustainable consumption. So it's just an extremely important topic. So what is sustainable investing? We'll throw a definition out here. Everybody loves definitions. Sustainable investing is simply an investment strategy that incorporates environmental, social, and governance criteria to generate long-term competitive financial returns and create positive societal impact. What that means in a nutshell is, as an investor, I want to find the best companies to support with my hard-earned money, right? I want to support companies that are going out and not only creating good products and services, but are also considering environmental factors, considering their supply chain, treating their employees well, caring about their communities, caring about stakeholders, not just shareholders, having diverse boards. All of these factors will drive a company to be more effective in creating sales. And there's this really terrible myth that surrounds sustainable investing. And that the myth is that sustainable investing is just not profitable, that traditional investing is the way to go. And this is just the fringe part of sustainability. And we haven't really found that to be the case. Monica and I put our money where our mouth is. All of our assets that can be invested sustainably are invested sustainably. When we make a recommendation to somebody, we own that product first because we believe in that so much. And we have not found that it has underperformed.
I mean, I think also the industry hasn't found that either. It's really interesting to see all these big players like Goldman Sachs and everybody now touting their sustainability and offering these sustainable and socially responsible options just because they see the growth there and where the trend is moving to. So it's definitely not just us. It's a huge trend that's been growing so much, especially in COVID, but also just in the past 5 years.
Yeah, so as I'm the chief investment officer at Good Capital, and I'm a wealth manager. And hopefully after you listen to this webinar, you'll think about this type of investment and incorporate some ESG into your own personal assets. But as a wealth manager, I always think about my assets in two different distinct lenses, which is risk and reward. And the ESG strategy that we implemented with our own assets and our client assets is a wonderful strategy to capture some of the risk that's prevalent in certain industries and companies. And this has been exemplified in the last couple of months with COVID. Part of the G, which is the governance factor of our strategy, is looking how a company is run. So looking at the board, looking at their policies, just looking at the internal workings of the operations of a company. So 2 or 3 years ago, when we asked companies, hey, do you guys have a succession plan? Do you have a work from home policy? Do you have a pandemic plan? If companies answer no to those questions, that flags as a risk for investment. So it's no surprise now that companies that do have these plans and do have backup plans and double backup plans and triple backup plans are performing more seamlessly now in COVID than their opposite of companies that do not have these policies in place. So that's a little bit about how we capture some of the risk with this ESG strategy. There's also a huge PR aspect to this. Companies that are perceived well by the public are going to have more sales. For example, Netflix just moved $100 million into BIPOC minority-owned banks. Tesla has donated ventilators to hospitals. DoorDash delivered 1 million pounds of groceries and prepared meals to households that were in need of food at the beginning of COVID. And while these companies are, it's great that they're getting back, that does lead to increased PR and hopefully to drive sales. So I'm going to go through an example of how we approach sustainable investing, how we build our portfolios, how our own personal money is invested, and how we invest for our clients. And as we go through the examples, I would encourage you to think how I think as a wealth manager, as through those two lenses of managing risk and managing reward. And most people always think about the second, the reward aspect, but who cares about reward if there's so much risk in the company that it's going to go bankrupt in a couple of years? So the risk is extremely important in managing assets. So the first part of our strategy is divesting. There are certain companies and industries that don't resonate with us. Their core product are harmful to consumers, to the environment, to society at large. I'm talking about coal, I'm talking about cigarettes, I'm talking about weapon manufacturers, private prisons. There's nothing about those companies that we can change because the products themselves are harmful. So when we were opening up our first account, which was our own assets, these are the industries that we didn't want to invest in. No matter what, we wanted to move our money away from those companies and industries. And unfortunately, these companies are held in target date funds and index funds. So Monica's account, which was the first account that we opened, was in a target date fund, and it held
my
coal.
401k.
Sorry, the 401k was held in a target date fund that had coal and it had tobaccos and it had guns and private prisons. So the first thing we did was we sold everything. And the reason we sold it is many sided, right? So we have a huge moral aspect, right? We don't morally believe in those core products that they sell. But let's put morals aside for a second, and just from a devil's advocate standpoint, let's look at one industry and make a case for why we shouldn't hold it, and that's coal. Right? Coal is a very dirty product. It's not a very efficient energy source, and it's a terrible investment to hold. It's been on the downtrend for, I'd say, 40 years. And there's new energies coming out, right? We have oil and gas, which is more efficient. We have natural gas, which is more efficient. And we have renewable energies.
Which is way more efficient.
So holding coal is like holding an iPhone 2 when there's an iPhone 11.
It's like holding a BlackBerry.
It's like holding a BlackBerry. That's exactly right. And coal represents just about 2% of a total stock market index. So 2% of a portfolio in an industry that hasn't been relevant in 20 years, and we don't feel will be relevant in the years to come. So not only do we feel that these investments don't resonate morally, but they're actually just poor investments on a risk-reward spectrum. From a core business aspect and from a legality aspect, there's lawsuits all the time against these companies from the EPA, from consumers, and there's also political risk associated with these investments, because who knows what the political climate will shift these industries in a positive direction. So that was the first step, was to clean up our portfolio of all the companies that we don't want to support, and no matter what, we're not going to get behind those core products. And I can make those arguments for tobacco and weapons as well. The next stage is, once we pull out of these industries, we have to find a way to invest in certain industries. And we use an ESG guidelines to screen for companies. ESG, again, is looking at environmental, social, and corporate governance factors in order to make a sound investment decision. And what we do is we pool companies into their respective sectors. So we're comparing tech to tech, we're comparing healthcare to healthcare, pharmaceuticals to pharmaceuticals. And the first thing we do, like every other investment firm, is we screen for profitability. We're not philanthropy, we're for profit, and we need to generate returns. So we're going to screen for profitability. The next thing we're going to do is we're going to layer on additional data to look at how these companies are treating certain risk factors, such as carbon emissions, water usage, labor practices, supply chain practices, board members. It always boggles my mind that people make investments in companies where the board members have lawsuits against them. Like if a board member is on the hook for tax evasion, why would you ever want to invest in a company that has a board member that's being sued for tax evasion? It's mind-boggling. So these are all the types of data that we layer onto traditional investment data to try to find companies that are well-run, that are durable, that can survive in downturns like we're living in right now. So what we did for our accounts, for Monica's account, is we built a custom portfolio that incorporates these ESG factors into the investments. And the last step is engaging with the companies that we own. So the divestment, while it creates impact, it's kind of a one-time impact, right? You can't sell from a company, you can't divest from a company more than once. You can only divest 100% of your assets once. And the engagement is how we generate impact, ongoing impact all the time. And as an investor, we're part owners in the company. We have a stake in that company. We have a say in that company. And if we want to voice our opinions, there's different methods in which we can do that. Companies hold proxy votes where shareholders are allowed to vote on company matters. They can also raise matters to the company, such as shareholder resolutions and direct engagement with the company. So we can go out and work with companies to not only improve their operations, but really look for risk inside their business to make it a better business. And a perfect example of that is in the last couple of months, there's been a lot of attention on social justice. So about week 2 into the heated protests that were happening around the country, surveys went out to, I would say, 95% of the companies that we own, asking, who are your employees? How much are they getting paid? What positions are they in? And if there is disparity between races and positions, why is that so? These surveys have to be completed by companies, and they'll get returned to the investors to identify risk within the company. Once that data is known, we can go out and try to fix these companies or try to improve these companies to be more inclusive. So that's how we approach sustainable investing. First, we divest from industries and companies that we don't believe in their core business practices. We invest in good companies that are screened for profitability, environmental, social, and corporate governance. And then we actively engage the company in order to push them to be better and push their products to be more sustainable.
Awesome. Yeah, so that's sustainable investing for us, also just in general. I'm seeing a lot of action in the chat, which is amazing. A lot of good questions that we'll definitely have a lot of time to get to. So keep adding them if you have more questions that pop up. Just want to wrap everything up that Gideon just said and talk about how we as a company, as Good Capital, as also as individuals, are incorporating social and environmental good into, or we're trying to incorporate it into everything that we do, into all aspects of our lives. We're investing responsibly, right? Everything that Gideon just talked about. We're donating. This year so far, we've donated 15% of Good Capital profits, hoping to continue that trend. I mean, we will, definitely. We've been volunteering a lot. Tomorrow we're volunteering with Feeding America, which will be really nice. Just in general, educating others on the importance of sustainable investing and how we can all make a difference. Just want to share, and I want to, if you leave this webinar with anything, I just want everyone to remember that we all have a role to play and we can all make a huge difference by just being more intentional about where our money is going, just thinking about that, taking that extra second and thinking about like what we're buying, who we're banking with. And if you're investing or if you're thinking about getting into investing, trying to approach it from a social responsible lens. And I just want to leave everyone with also that there's been a lot of social action going on, right? As we march in the streets for racial equity, do we want our investment dollars to be used towards funding private prisons that perpetuate racism? As we protest police violence and call for the defunding of police, do we want our investment money going towards funding gun manufacturers? As we urge lawmakers and corporations to take a stand for climate change, do we want our investments to fund companies who are the biggest climate change offenders? As we call for more women, more BIPOC, more queer, more minorities, all minorities in boardrooms and on C-suites, on executive teams, do we want our investment money funding companies that are run by white men at every single level? as we write our representatives about the need for affordable housing and community-based solutions, do we want our investment money going towards funding developers who are gentrifying neighborhoods at alarming rates, right? Like, these are all things that are interconnected, and all of our choices have consequences. So just want everyone to think about like how we all can make a difference, because we really can together. And obviously we all here, all part of Be Social Change, because we want to make that difference. And we want to create this society, build the society that we want for our grandchildren, our grandchildren's grandchildren, right? So yeah, that's it.
Yeah, and we're just getting started. I mean, when we launched Good Capital, it was our own assets at first, and you know, we keep track of the impact that we've had already, and the amount of assets that we've divested from harmful industries is just staggering. And I mean, we're just getting warmed up, which is awesome, and it really compounds itself. And through all these lenses and through all the research that we do, we're really finding that companies are waking up to not only ESG investors, but they have to be reckoned by the public. And there's just so much outrage out now, and there's a lot of movement going towards a more just and equitable future, that companies are going to wake up. And the more assets that are in these types of strategies, either with us at Good Capital or other firms, it's this snowball effect. And you know, these companies, they're run by humans, and these humans think in dollar and cents. And if the dollars are walking away, they're gonna wake up to the things that they need to change.
Yeah. So that's all we had planned for the talk. We're going to get to all the questions, hopefully. If not, we'll answer them after. Just putting some information about Good Capital on here. Sign up for our newsletter. Just go to that website. You can also connect with us on LinkedIn, Facebook, Instagram, whatever works for you. Yeah, we can also leave our emails in the chat, just in case anyone has any other questions. All right, let's get to the questions. Okay, do you want to just, oh my gosh, so many questions rolling in. Why don't you pick one to start and then.
All right. Do you have any advice for how to divest from mutual funds without incurring large penalties? So while we at Good Capital like to think we're disruptors in this space, we're still beholden to a lot of regulatory of what I'm allowed to speak about, or what we're allowed to speak about, to an open forum like this. So without knowing a specific, like your own specific finances, it's tough for me to make recommendations. But if you go, there's a lot of resources out there. If you go to asyousow.org, which I think someone wrote in the chat before, it's a wonderful resource to actually see what your investments are invested in. So as I touched upon before, Wall Street's done this amazing job of wrapping up all these companies into index funds and mutual funds and target date funds. So it's tough to actually see what the core companies that you're invested in. But As You Sow kind of lifts the hood on your investments and will tell you, well, you know, 5% is in coal, or 2% is in weapons, or X amount is in fossil fuels. And it's a pretty, I would say it's traumatizing, but it's not really fun to look at. But it's important to know what the underlying holdings are. And As You Sow will kind of pop the hood on that. So it's asyousow.org.
I see Ariel also put that in there. Also, I think in terms of divesting from mutual funds and just in general how to move your money, we can talk for like generally in terms of the work that we've done with our clients. It's coming up with that financial plan, right? It's seeing what you want to be doing with your money, your goals, and when you'll be needing the money. So we create a huge, like a very complex, tailored everything to you financial plan to help our new clients coming on board switch over. It's not just like you come on board, we're going to divest everything, you're going to have to pay a ton of taxes, and then you're invested responsibly. It's more of a process for sure, where we take into consideration taxes and depending on the type of account, time frame, risk, all of that sort of stuff too.
Exactly. Everything's custom. How often do you actively review the companies you have invested in? What is your average ROI in the funds/companies you choose to invest in? So again, I'm unfortunately not allowed to talk about specific performance on the ROI side. All I can say is that, we, as I said before, we're also invested in these companies, and I wouldn't sit here preaching about this strategy without having conviction in it. I fundamentally believe that this is the way that the industry is moving, and that, the ESG investment lens is just layering on additional data. So whoever has that data and is using that and incorporating that is going to have a leg up versus companies that aren't looking at that data. So this is just the trend moving forward, and I hope that every single investment firm moving forward will incorporate this kind of data before. And how often are we actively reviewing the companies we have in our investments? It's pretty often. We're running reports all the time. We're evaluating what we want to give access to. We're looking at tax verifications. It's a pretty active process. And going back to what Monica said, everything's custom built. So we have clients that come on all the time that want something specific, that want a vegan allocation, or they want a solar allocation, or they don't like a specific company, and everything gets built custom to that. Yeah, everything can be customized.
Yeah, and just going back to the part of the question about average ROI, I really want to stress that there's been a ton of research recently that come out. I can share it later, about how ESG funds have been outperforming traditional funds. So that research is definitely out there, and it's looking good for us, which is great.
But that's historical. We don't know moving forward. We can only say that having more data is never a bad thing, and using that data, hopefully we'll find, again, like I said before, we'll find the risk that other people aren't looking at, and can position a portfolio to do well.
Yeah. Okay. Abby's question. Just curious as to why do you advocate for nudging your existing big bank via My Money, My Planet versus moving over to a better bank and making noise when you leave? I was going to say, I don't think we prefer one strategy over another. We're just offering two different things that you could be choosing from, two options. Right. I think in general, we approach things from trying to create change from the inside, but also divesting, right? So it definitely takes both. It takes people leaving the bank and making a lot of noise when you're leaving and saying why you're leaving, and then moving your money into local community CDFIs, community development financial institutions, CDFIs, credit unions, just better banking through that. So it's definitely not an either or one is better than the other. We're definitely encouraging you to go with whatever you feel more comfortable with, and just providing those two options. Yeah.
A huge aspect of it is just knowing that there's agency that's behind your money. Like, you can do whatever you want with your assets, but you can create impact with those assets at the same time. So whether you think that impact is leaving the bank or trying to create change within the bank, that's entirely up to you with what you do with your assets, but either way will speak volumes.
Good question. I see Candida shared an interesting article on the impact of renewable energy in USA's economy. Cool, definitely have to look at that. Thank you for sharing that. Ariel asked, do you use As You Sow? Yes, we do, or the newly public MSCI. You want to talk about I think there was another question about, or maybe it was Ariel's question earlier, asking about
rating companies.
Yeah, what rating companies we use. I forget.
Yeah, so there's a lot of ESG rating companies that are on the marketplace right now. MSCI, Sustainalytics, there's two out of Europe, I think SSI. There's a lot of different companies that are scraping data for environmental, social, and corporate governance factors. They're all different. They all screen different things. They all have different lenses. They have different methodologies. So there's really not a coherent data set or coherence between the data sets, which some people gripe about. I kind of like it because you get a different view from different agencies of what's going on in the sustainability space. So I think that's actually a good thing. We use Sustainalytics. Morningstar bought Sustainalytics a couple of months back. So we use Morningstar, which is powered by Sustainalytics. And it's great software. So we can actually look at, companies' risk with regards to these different factors, they'll assess the risk level of certain companies and industries, and then they'll really look at every single aspect of the operation. So they go through the supply chain. They'll go through just how the companies run, whether or not there's diversity on the board. It's a pretty comprehensive review that these companies have to fill out and submit to these rating companies. And it's progressed so amazingly the last couple of years. You know, most of the data that we pull from the companies is actually self-reported by the companies themselves. So when the industry just started ramping up, probably 2011, 2012, only about 40% of companies were reporting this data to the rating agencies. And now it's almost at 99%. And when a company doesn't report data, that's a huge red flag. Like if a company was surveyed for median pay across the different verticals, and they don't have that, they don't have that data, well, that's huge. That means a lot to investors. Say like, oh, they don't even know what they're doing on the operational side. That's crazy. So that's a huge red flag for investors. And I think that reporting is only going to get more comprehensive and more rigorous, and companies have to abide by it.
Yeah, well, not that they have to, but we're finding that companies actually want to be reporting these things and want to be considered on the ESG trend just because they want to hop on the ESG trend and they want to be considered sustainable. So companies are changing their company policies, not necessarily because they actually believe in sustainability, but because they want to be perceived as being sustainable so that they can break in those investments.
So cynical.
No, I mean, it's right. We were talking to somebody who was telling us about how Saudi Aramco they're consulting with ESG consultants because they want to rank more highly, and it's not necessarily because they actually care. But also, as there's a ton of information out there, right? It is all self-reported, as Gideon said, which has its pluses and its minuses. But we just started using a new startup called yourstake.org. Would definitely recommend everyone check it out. They don't use self-reported data. They gather data from like 300 different sources, nonprofits, NGOs, just not self-reported data, which is amazing. So we also look at our portfolios through that lens. And they just have a really cool website. They also help with shareholder activism. And you can actually, as an individual, go and sign on to the petitions, which is cool. So definitely explore that website. Oh, I love the good trade, Ariel. Ariel shared green banking from the good trade. Just talking about banks that are good. We started with aspiration a while ago. Do people here, a host from NYC, know banks aside from Amalgamated and Spring banks that are most ethical / socially responsible with money we deposit? I'll go. So we've heard great. We don't belong to any of those banks, but we've heard great things about Amalgamated. I haven't really heard that much about Spring banks. Also, I've heard of a lot of people recently moving to local community banks. There's a few in Brooklyn, I think, that people have been moving to. Check out ones that are in your area. I think really those CDFIs, those community development financial institutions.
I'm sure if you go out and Google sustainable banks in New York or wherever you are located, there's gonna be a lot of options coming up. There's this trend is only getting bigger, and institutions are filling the demand. So there's definitely sustainable and local options for everybody that wants to move into sustainable banking.
Yeah. Oh, Camila and Caleb said that they have an account with Alliant.
What about retirement funds? My traditional fund overperforms my sustainable fund. So if it's in a company issued 401k, there's not too many options that the employer allows its participants to opt into. There's usually I think I've seen at most 40 options that a company will allow its employees to invest in. It's whatever the investment advisor that controls that fund that has made a decision of what to put as an option. And it's possible that fund has underperformed the other funds. not all fund managers are equal, and yeah, it's definitely possible that the sustainable fund didn't perform as well as the traditional funds. I mean, that happens.
I think also, well, as we're talking about ESG trending to be more and more popular, more and more people are demanding for ESG options to be included into their 401ks. If we're talking about 401k funds, if you're interested about talking to your employer about that, we can definitely help. We've talked to a few people who are trying to do that, which is amazing. So it's definitely something that you can advocate for if you work for a company that doesn't offer sustainable options in your 401k, or maybe subpar options in your 401k. But that's great that you looked, Emily, and that you know that. Here, we have 2 questions about credit cards. From Yaz, with regard to credit cards we can place in our wallets that do the most good environmentally, socially, ethically, in general, any websites or companies that list or mention better ones to carry. And then Roraima asked, what about credit cards? It'll be interesting to know which ones support sustainable initiatives. So credit cards is interesting because we actually don't have a list of credit cards, socially responsible credit card companies. There aren't that many credit card companies, or at least ones that I even know of, that are specifically socially responsible. Like when you think about banks, like Aspiration it's a socially responsible bank. I don't think that there are actually any socially responsible credit cards, unless there are ones that have come out recently that I don't know of.
I'm pretty sure there's one that will donate its profits to whatever the consumers collectively choose at the end of a quarter. I want to say that there definitely are sustainable credit card companies. I'm not sure.
Or they're ones that have the socially responsible side twist to them, but it's not its focus, I think.
Yeah.
Like that, I know I don't know off the top of my head, but I know what you're talking about. I definitely read that one. Let's get back to you.
There's not a lot of players in that space because usually they're all, MasterCard or Visa card. But we'll look into it and get back to you. Thanks for stumping us.
From Camilla and Caleb, how does Good Capital handle proxy voting? Do you vote for your customers? Do you manage enough shares to have an impact? Great question. Do you want to start by explaining what proxy voting is?
Yeah, sure. So proxy voting is the method of, telling a company that either you agree or not agree with something. So they're just a yes or a no vote when voting on company matters. And as a shareholder of a company, you have a right to cast your vote in favor or against any measures that come up to the board meetings. So there's very strict guidelines in which we have in order for casting a vote on so many different issues, from CEO pay to environmental policies to racial equity to supply chain management. There's pretty stringent guides onto how voting happens on the corporate level. And do we manage enough shares to have an impact? I like to think we do. One of the companies that Monica spoke about, which was yourstake.org, actually looks at our portfolio and sees how many company policies and how many companies that we've pushed through our proxy voting or engagement to make a difference. And there are several examples just last year of what our portfolio did to push change in companies. And again, that's changing their corporate policy to be more inclusive. That's managing a supply chain a little bit more efficiently. There's a whole slew of different examples about how companies change through our proxy voting. So yes, I mean we do manage enough to have an impact. And an impact is and has been made through our portfolio. Yeah.
Also, I just wanted to be clear, we don't actually physically do the proxy voting. We invest in actively managed funds that will then handle the proxy votes for us. But we have vetted these funds so that we know that their values are aligned with ours and that they're going to vote according to how we would vote. And that they're actually going to take advantage of that voting, because I know a lot of companies or a lot of fund managers, they'll just vote with whatever the board or with whatever most shareholders side with, and that's not who we're investing in. Right. So we're definitely investing in funds that go out and do the proxy voting for us and our clients, but in a way that we are aligned with and that we approve of. Oh, interesting. Yeah, said Aspiration Bank almost ran out of money last year, if I remember correctly, a bit too risky. I didn't hear that. It's very possible. I mean, one thing with with new products and new banks is that they don't obviously have the 45% of funds that JP Morgan, Citibank, Wells Fargo, and Bank of America have, right? And that's also the case with these newer social responsible funds that we're investing in. They just don't have as much funding because they're new and because they're up and coming. So it's definitely a risk to take into consideration. So thank you to Yaz for pointing that out. We consider the risks, and we also consider the importance of supporting these new products and these new banks and helping them become larger and more less risky.
With banks, as long as they have the FDIC insurance, you're covered up to $250,000. So if the bank, if Aspiration almost ran out of money and they declared bankruptcy, the insurance policy would kick in. So if you had a couple $1,000s in the bank, FDIC insurance would compensate you. So always, when you're looking for a small bank, if they have FDIC insurance, then you're covered up to $250,000. But it's important to, with a bank too, it's a lot about convenience and what's convenient for you.
Mm-hmm. Elizabeth, it seems like the large ESG funds are dominated by tech companies since they meet the criteria. Do you agree with that strategy?
So, I mean, tech companies definitely dominate the stock market right now overall from a market cap standpoint. But our portfolios are diversified through sectors and across sectors. So we don't find that there's an over allocation towards tech. There are ESG and sustainable products that capture a whole slew of different industries that go across the growth to value side of the investment spectrum. So maybe the most popular ESG funds are dominated by tech, but they're also very highly rated products that are on different sides of the I guess risk reward spectrum.
Yeah, I mean, right now tech companies are doing great, so
they have done great.
Thanks, Roraima. Yes, my last question. With regard to climate change, our website data and lists from RAND.org, I don't know that one, fossilfreefunds.org and deforestationfreefunds.org reliable in your opinion? Do you take them into account? All right. Yeah. We have not looked at those websites and lists. Definitely going to look at them after this call. So because we don't really look at them, we don't take them into account, those lists in particular. But we definitely take into account trying to be as fossil free as possible. There's a new ETF that we're looking at that's completely fossil fuel free. And deforestation in general is also just one of those ESG things that we're looking at too. But I don't know that much about those. If you want to tell us a little bit more or about your opinion of them, that would be great too.
Yeah, and I think we're living through this amazing time where we're pivoting from fossil fuels to renewables. But living in 2020, it's hard to not touch fossil fuels. I mean, if you go drive a car, if you have deliveries, if you shop at the supermarket, all of those food was delivered probably by fossil fuels. So I think we're living this wonderful time where we're transitioning away from fossil fuels, but they're still unavoidable at this point in time. But renewable energies are making up more and more of the marketplace for energy, and that trend will continue and will be funded by sustainable investment approaches. I also want to make a point here. Every once in a while, a hot topic will come up either with a specific company or across a sector. And our opinion and our viewpoint on the investment side of it is to not necessarily pull out of the company right away, to have a knee-jerk reaction when something hits that's not favorable to us. Our main goal is to fix the problem from within. And going through our investment strategy, there are things that we cannot fix, like a core business model surrounding coal or weapons. So we don't want to invest in those. But if a company has a blunder or a speed bump, our main goal is not to starve them of capital, but is to fix it from within. And that's where the engagement really comes in.
Yeah. Oh, yes. Thanks for responding. Yeah, I don't know if they apply biases to how they gather and convey data. And I'm assuming that's the case. I wasn't sure. Yeah, I mean, I think that if the website is called fossilfreefunds.org, they probably have some sort of bias. But it's definitely, I think it would be interesting. I'm going to definitely look at them. And just in terms of how we gather information and choose our funds in general, we look at a lot of different information to make that decision. So just getting.
And also, I mean, yeah.
Are those websites part of As You Sow? Then I would trust it.
Yeah,
okay.
It's tough. It's tough for fossil fuel because there's fossil fuel companies, right, that produce fossil fuel, but then there's Amazon who creates so much carbon because of its deliveries and its packaging. So like that's not fossil fuel free. So the lines kind of get blurry with what you want to accomplish with being fossil fuel free.
Yeah, and just the way people define things, and it's very gray and not. Also across the industry, there isn't one standard for what ESG is. So definitely looking at the more resources, the more information, the better, I think. Yeah. Oh, RAN is Rainforest Action Network, not part of that. Cool. I think was that all the questions? I want to make sure we got all of them. Okay.
But we really thank everybody for your time and joining us for an hour here. I hope everyone learned something and walked away with something that they can implement in their own lives to be more sustainable on the finance side. Please use us as a resource. We're here for you, and if we can help in any way, please reach out. Please visit our website, goodcapitalinvestmentgroup.com. Please sign up for our newsletter. If we can be of any help, please let us know.
Yeah. Oh, forgot. We have a quick poll. If you're still here, it's just a little feedback thing. If Marcos or Jen could put that up, would just love to hear your feedback while you're here and while everything is fresh. And if you have other feedback or other questions, as Gideon said, let us know. We love talking about what we do, and love to hear from you too and what you're thinking.
All right, and we can show the results of that poll. All right. Love that. That's amazing.
Amazing. Awesome. Thank you everyone for coming, really.